Hey, Bitcoin has gone from $20,000 down to $3,000, and today it's back up around $5,000. But is it cheap or is it expensive? In this video, I'm gonna give you 10 reasons why I think Bitcoin is undervalued today, so stay tuned. Welcome back, market disruptors. Today we are going to be talking about investing into technology cycles, investing into Bitcoin, cryptocurrencies, and like I said in the intro, the price has been all over the place. What's going on with it? Is it expensive? Is it cheap? What's going on? I'm gonna give you 10 reasons why I think it's undervalued today. All right, now, the first thing that I always have to say is that when you're investing into new technology cycles, technological revolutions, it's a lot different than any other type of investing. Now, I invest into all types of markets. I talk a lot about, gold and silver, oil and gas, energy, real estate, stocks, bonds. There's all types of things you can invest into. Private equity, businesses. I mean, you can invest into all kinds of things, baseball cards, right? And every single thing that you invest into has its own set of rules, right? Its own set of circumstances that you have to know about. And so you can't invest into baseball cards the same way that you invest into stocks. You can't invest into new technologies the same way that you invest into stocks, right? So a lot of people look at Bitcoin and they don't really understand that key piece right there. And they think, oh, it's a horrible investment because they don't understand that it's not the same as investing into these other things, right? So when you're investing into new technology, there's a couple key things, right? One, there's no fundamentals, no what most investors would call fundamentals, right? So fundamentals as far as like cash flow and assets and balance sheets, none of that. So there's none of that. Now there's fundamental reasons why it's good. Those are different, right? But there's no like what a normal investor would call fundamentals. And so really when you're investing into new technology, you have to invest into future valuations. It's like what a venture capitalist has to do. So imagine you're a venture capitalist, if you can imagine that for a minute, and you're living in Silicon Valley, and someone came to you with this idea for this ride sharing app like Uber. But there had been no such thing as it before. So they said, hey, we have this idea, and we want to build this app, and we're going to match riders and drivers, and it's kind of like the limousine and the taxi space, but it's going to be different. It's going to be more peer-to-peer. Well, there's no such thing as that. So how do I value that? How do I decide how much I want to put in, what the valuation of the company is going to be? Well, it has to be based off of a future valuation. And so that's the first thing I just want you to know is that when we're investing in technology, it's based off a future valuation and not so much a current valuation. And the other thing about when you're investing into new technologies is that the price is a distraction. All right. Now, of course, when you're investing, you're looking to make money, but when you're only looking at the price in new technologies, it's a distraction. Now, if you're investing into other types of assets, the price could be the feedback that you need, but with new technology, it's a bit of a distraction because it's a new technology. And so with a new technology, we need to see adoption and innovation happening. We need to see innovation. Is the adoption, the technology, is it being innovated? Is it being improved, right? Is it growing? And then also, is it being adopted? Are people starting to use it? Will it achieve mainstream adoption? So those are the key metrics that we want to look at, not at the price. Like with Uber, for example, right? I mean, it's going to take years and years and years for that adoption to happen. And if you're only looking at the price, it's not really going to tell you what's happening in the future. So the price is important, of course, but when you're only looking at the price, it's a distraction. Look at the innovation and the adoption. And so when you do that, you get a completely different picture, and that's what we're going to talk about today. Now, one thing that I also like to talk about with new technologies is they're very, very volatile. Now, volatile meaning that the price is going up and down, right? Now, it's a good thing and it's a bad thing. It's a good thing because it allows us to make a lot of money. It's a bad thing because it can be stressful, right? You see this swinging up and down and you think you're up one day and then you're down the next. And so you have these wild swings in this volatility. And there is a technical definition for volatility, but what I really like to call it is I like to say it's the difference between perception and reality, all right? Simple. The difference between perception, the way that I look at something, and the reality of what it really is. All right, so that's the way that I look at volatility. Now, if you think about this, way back about a year and a half ago, right, when Bitcoin was really running, or about a year ago when Bitcoin was really running high, into 2017, and it was, 1,000, 4,000, 8,000, 12,000, 20,000, the perception was that it's taking over the world. It's going to be the store of value for the whole world right away, and it's never going to come back down. That was the perception. The reality was different. The reality was that, well, less than about maybe 2-3% of people had ever bought it. The reality was the technology wasn't far enough along to really be adopted. The reality was it was slow. The reality was all these different things. So the perception was here, but the reality was here. And of course, perception crashed and reality stayed here. We've talked about this before. So that's the definition of volatility in my mind, perception and reality, the difference. So what is reality? What's reality, right? What is reality? So let's take a look at that. What's reality today? So these are the 10 reasons. Reason number one, this is a fact, right? The amount of Bitcoins in circulation. So Bitcoin is the most scarce asset in the world because it's programmed in. We know exactly how scarce it will be, right? Other assets like gold, for example, they're still getting no new gold out of the ground. So it's still being inflated. The supply is being inflated. Now, it has a very low inflation rate. It's what we call a stock to flow ratio. So the amount that we have in inventory, the stock versus the new flow. So it has a very good stock to flow ratio. US dollars, on the other hand, we don't know how many there are. They just print as much as they want. They take them out. So we never know. It's always changing. But we do know that Bitcoin is the most scarce asset out there. We know there's about 17 million in circulation today. There will never be more than 21 million ever. Of course, there's going to be less than that because they estimate millions have been lost, keys have been lost, computers have been destroyed, etc. Maybe we'll only end up with about 16, 17 million total once we're done with the 21 million mining, but it's the most scarce asset in the world, so we do know that. And you can look at the Bitcoin that they're going up in circulation, and the amount that comes into new circulation every year goes down. We're not going to get into that, but the other fact with Bitcoin is the hash rate. And you can see on this chart here that the hash rate is going up. Now, the hash rate is the computers that process the transactions, the miners. And as they're processing these transactions, it's proof of work. They're using electricity and a computer to build these blocks onto the blockchain, and it secures it. And so the more people that are doing this, the more hash power there is, the more secure the network is. And what we can see is that the network security, the amount of hash power has increased by over 10 times and just in the last 2 years. And so again, perception and reality. The network is growing, the hash power is growing, the security is growing. Now it's the most secure network in the world. In 10 years, it's been up all the time, like 99.8% of the time. It's never gone down in 10 years. Not to mention it has billions of dollars or hundreds of billions of dollars sitting there in an open source network with no guards, no security, open source for everyone to see the code, and it's never been hacked, right? We know that Target's been hacked, Experian got hacked, the CIA was hacked, the NSA was hacked. Bitcoin's never been hacked. $100 million, or I'm sorry, $100 billion sitting out there, open, in the public, open source, no security, nobody guarding it, and it's never been hacked. So, and it's only growing. So that's the reality. The network is growing. It's improving, it's getting stronger. The miners, again, the miners are the ones processing these transactions, proof of work, right? And so they're building this. And we can see that miners are now making more money in USD value than they were 2 years ago. So we can see it spiked, of course, when the price spiked up, it's come back down, but now the miners are starting to make money again. Now, one of the ways that Bitcoin was designed is with this game theory. And so, when it becomes unprofitable, miners drop off, which makes it more profitable for the remaining ones. And then it gets more profitable, so miners jump back in. And so there's this game theory, and that's part of the way that works. Another reason why I believe that Bitcoin is undervalued today, the difference of perception and reality is improving, that it's the cost per transaction. So you've heard that, they said, all the naysayers say that it's too expensive, right? It's too expensive to run transactions. Well, the price of the transactions did get really high. However, new innovation that's happened has allowed the prices to come down, and now we've seen the prices of transactions fall down over 60% just in the last year alone. And it's not just because of network activity going down, it's because of innovations and things like that. So it's another fundamental reason why I believe reality is over perception right now. So perception was here, it's down to here, and I believe this is the gap right here. The next reason is the transactions per day. So we can see that in the last 2 years, the transactions per day on the blockchain, the network activity, is up over 70%. It's an amazing, amazing pace. And what we've seen is that it's been continually rising like over the last 12 months, as you can see from the chart right here. So again, it had a spike. As you can see, it fell, but now it's slowly climbing back up. And we see, it hit that low in about May of 2018. So again, perception and reality got out of whack. And now the reality is that you can see here the transactions per day are escalating. They're growing pretty quickly. And then the number of wallets. So when you hold Bitcoin, you hold it in your wallet. So those are really the amount of users. Now, one problem that we get in with new technologies is we try to understand it. So we try to compare it against something that we know. I don't like that because it kind of paints it into a box that it maybe doesn't fit. So one of the metrics for internet companies was like the average users, daily active users. And so a lot of times we want to look at blockchain technology, Bitcoin, and look and kind of use that same metric, which maybe doesn't really work. However, it is one metric to look at. So we look at the number of wallets, that's the amount of users, and we can see that the amount of wallets has been going up at a pretty solid pace. It's actually gone up 2.5 times in the last 2 years. Estimated to be about 32 million wallets in December of 2018. Now, that's not an exact number of users, that's the number of wallets, because each user can have multiple wallets, and so we don't know the exact amount of users, but we do know the amount of wallets, 32 million, so that's growing pretty rapidly. Another reason why I think that reality is better than perception right now is the price. We know that the price obviously went up really high and then it crashed. We know that, but it's now slowly starting to come back up a little bit. And if you zoom out, what we always like to say is zoom out. Yeah, maybe the last year wasn't so good, but when you zoom out, Bitcoin's worth almost 450% more today than it was 2 years ago. So there's no other asset class in the world that's done that over 2 years. So if you want to take a small chunk of time, a 6-month period in beginning of December 2018, from December to like say July of 2018, it was pretty bad, right? It was a really bad asset class. However, over the last 2 years, it's up almost 450%. And another reason why I believe that reality is a lot more than what perception is today is the financialization of Bitcoin. Now, this could be a good thing, it could be a bad thing depending on how you look at it. However, you can't ignore it. So financialization meaning how it's being accepted into the mainstream finance world, right? So Wall Street, etc. And so we know like the CME, they're doing futures against it. ICE, the New York Stock Exchange, which is owned by ICE, they are bringing Bitcoin in and starting to do futures and custody and all these things on it. Goldman Sachs, probably the top of the heap for the financial world. They're invested into crypto projects. And TD Ameritrade, which is one of the largest exchanges, also Fidelity as well, but TD Ameritrade, they bought a platform, ErisX, to do Bitcoin on. And then just about 2 days ago, information was leaked where now TD Ameritrade is starting to show Bitcoin in everybody's accounts. And so the screenshots were leaked, as you can see in the picture here, and a conversation that happened with support. And we know they were going to come out with it. We've been waiting for that exact date, and supposedly now it's showing up. And so it's being financialized. And all of these things are real. All of these things have happened, and none of it's being reflected in the perception, right? The next reason that's a really big one and can't be ignored is the millennial generation. Now, say what you will about the millennials. However, they are the largest growing segment of the population. All right, so there's a lot of them, and they're getting older. It's growing pretty rapidly. They have more disposable income. They said they're supposed to have more disposable income than any other generations by 2029. So in less than 10 years, about 10 years from now, they're going to be the dominant generation with the most disposable income. And what's important to understand about the millennial generation is that they were raised in a different time than the generations before them, and they have this worldview. We all have worldviews based off of when we grew up, the way that we look at things. And they basically grew up seeing this 2008, 2009 collapse. They saw the banking system collapse, the whole financial system. They have this distrust for the normal financial system. And also they're used to this digital age. They're used to digital assets. They're used to having things inside their video games and their and their other online assets. And so they're gonna be much easier to switch over. And they're also used to more like peer-to-peer stuff with what we've seen with like BitTorrent, where they can exchange files directly. And so we're seeing this over the next 10 years, it's gonna be rapidly scaling and growing into this largest segment, and they're gonna really help usher this in. And then the last, number 10 reason is Google Trends is showing us this. So adoption is on the rise in other countries, and this is what's exciting. We see it in the economically troubled nations. We've seen it big in Venezuela, Brazil, Colombia, Africa, South Africa. And if you go into Google Trends and you search, it's actually the most searched term in South Africa, Ghana, and Nigeria. So there's a ton of stuff going on in emerging markets, which I really like because they're a lot more susceptible to switching over to that for like a full-time basis. And once those countries start switching over, I mean, it's done, right? The rest of the world is going to slowly be behind them. So that's 10 reasons why I believe the reality is way above where perception is. So again, perception had gotten ahead of reality. The price was too high. Perception crashed down. Reality has improved, but perception has not caught back up yet. And that is the advantage for us as investors. We want to buy when the perception is below reality. When the perception is above reality, that's when we sell. That's when we take profits. We wait for it to correct. We buy back in here. And as reality continues on a trend like this, perception will continue to go up and down, and we sell, or we buy, we sell, we buy, we sell, we buy, we sell, etc. We take advantage of volatility. Hopefully you like this video. Hopefully it's encouraging. If so, give me some thumbs up on this. If you don't like it, give me some thumbs down. Either way, let me know. I love your feedback. Make sure to leave me comments down below. I love to engage in conversations with every single one of you. We get into some pretty good stuff here and there. Ask me some questions. Let me know what you're thinking. Share the video if you know someone that likes it or could benefit from it. And that's it. To your success. I'm out.